new concept in terms of an international currency anchored in gold 40%, BRICS currency 60 plus percent. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics as we kick off another trading week. Hope everybody had a great Memorial Day and took some time to appreciate, especially if you're fortunate to live in a place that is safe and protected, whether in the US or outside of the US, even if you don't always agree with some of the greater causes or politics of some of these wars, that there are people that defend our freedom here in the US and other places. And anyway, hope people had a moment to appreciate that and have a good holiday as well. I know certainly I'm guessing some of the people watching this show may have flipped over to the silver ticker once or twice, which certainly we had a nice Memorial Day rally in the silver market. And to talk about that, as well as some of the changes in the markets, a few news stories that have come out that I think you'll find interesting, is Andy Schectman of Miles Franklin. So Andy, welcome on in. How are you today?
Good to see you, my brother. I'm all right. I appreciate being here, and thank you for all your kind emails while my wife was laid up, not feeling so well. I appreciate it, and very, very much. And good to be back, bro. You're right. Things are accelerating. There are definitely things that are accelerating. And I look, speaking of the Monday rally, a lot of times that's when the smart money makes their move over holidays. Was always a saying that the smart traders didn't like to have these open positions over a holiday. Where the American public didn't have access to the market, and yet silver shot up $1.50 or whatever, $1.30 or whatever. Here it is this morning on what is it, the 28th. I see silver close at 36.01 on the Shanghai Gold Exchange. They can't hold this down. They really can't hold this down.
Yeah, and here we see in New York or in the US here and on the COMEX, we have right around $32 as we're recording on Tuesday morning. And as you pointed out, this is from a couple of hours ago when silver was about 31 and a half here in the US. And you see that $4 spread that still exists there. So with that said, Andy, let's dig back into what happened on Monday. In fact, if we can take it a step further back, we sat here for years wondering what would happen when silver breaks $30, which, again, I might point out that is aside from if you count those few hours when we had silver squeeze back in 2021, this is only the third time we've had silver go above $30. So I think on one hand, certainly significant. We've wondered what would happen when it breaks through. I think the week since then has certainly been, you can't complain for lack of action. I mean, it went up beyond 32. Last Monday, we saw 4 or 5 intraday $1 swings in both directions and a little bit of a sell-off towards the end of last week. But again, that impressive rally in the last 36 hours that has left us at $32. And curious, any of your thoughts on any of that?
It's like the gold and silver markets seem to be playing by a new set of rules, as far as I'm concerned. And Zoltan Pozar was dead freaking on when he said that we're entering a new system where it will be all about commodities. And I would say that commodities are becoming more valuable than currency. He who has the gold makes the rules. Well, he who has the gold, the silver, the rare earth metals, the copper, the lithium, the uranium, soft commodities, the food, the shipping lanes, they make the rules. And I think I think the West has lost control of being able to hold down the paper price the way they once did. In years past, Chris, and you and I have suffered through it when silver would, like silver squeeze is a prime example. I mean, I'll never forget that weekend. I mean, I never worked that hard in my life. I was staying up 22 hours a day, working nonstop to keep up. I figured I've never seen anything like this. How can I go to sleep? Give me more coffee. And then bang, they just crush it right back down again. And that was what, February 2021. Here we are, 3 years later and plus, and it's just now getting back. So it's different this time. Is it? Sure feels that way. It feels very, very much different to me. And I just think that what you are seeing is a set of rules that are now moving towards, you know, the real thing and the acquisition of the real thing. You know, I find it interesting that there's been a lot of talk about the bullion bankers visiting the Shanghai Metals Exchange. And I went onto their website, and you can see for 4 straight weeks, starting the second week in March, you first had Deutsche Bank, then HSBC, then JP Morgan, and then Standard Chartered Bank all show up there. And the question is, why? Could it be a coincidence that you're beginning to see since that day, if you look at the numbers on the Shanghai Metals Exchange since the second week in March, their silver inventories are going straight down. Did they strike a deal with the Chinese? Bail us out, please. We're naked short so much. We need your help. We can't find silver because, you know, there's 800, according to the LBMA, there's 800 million ounces of silver there, of which 500 million belong to the ETFs, leaving only 300 million. Who knows how much of that is really true when it's an over-the-counter market with not great transparency, and you can write as many contracts against those bars as you want. That's the promissory notes. It's what they've done. It's what they're doing on COMEX, which is 1700% rehypothecated. And the silver inventories on COMEX have been bled down, and maybe they're trapped with these massive short positions. Who knows what deals were struck in the back rooms with the Chinese? Help us, help us. We'll do anything. We'll give you gold, whatever it is. But it's true. I think that there are some very interesting things going on. And when you realize that you cannot export gold out of China, you have to deposit a gold bar, your own gold bar, into the Shanghai Metals Exchange before you can then export it. So this is all about silver. It's not about gold that these bankers are showing up. It's not about benevolence. They're showing up there, and it has to do with silver. And when you look at a country like India importing between 500 and 600 million ounces in the last 2.5 years, when you realize that, you know, the COMEX inventory has 40 million ounces or so unregistered, which is rehypothecated 1,600%. When you realize the LBMA just came out and said their silver stockpile is the second lowest it's been in the 140-year history of the exchange, they're running out of ammunition. And that's the thing. When these bankers set up this deal to create this over-leveraged system, no one ever stood for delivery more than a few percent anyway. Certainly not a sovereign nation or in coordination, sovereign nations with intelligence and cunning and guile and wealth and sophistication. I mean, that's what they're doing. And I don't know, man, it just seems that things are starting to get really, really, really interesting in the metals market. And I would argue that the long-standing, decades long-standing ability of the Western commercial banks to manage the price, I think it's ending. And the real flow of metal from west to east is happening. And what I find craziest about all of this is that there are very few people. You're one of them. Vince is one of them. I'm one of them. There aren't a lot of people who are talking about this, and the underestimation of the significance of this is insane to me. But it's happening in real time, and I think it's going to start to get really nuts here pretty quick with the shortages of supply and these naked short positions. And I want to talk about our old friend Jeffrey Currie for a moment. I don't know if you saw the article that he came out with. I'm sure you probably did, as you see everything silver. But it's worth talking about because remember, Jeffrey is the guy when he was at Goldman Sachs that famously said that the ETFs are the shorts, that the ETFs short the metal into the market to hedge the position. That was a faux pas of ridiculous proportions, because when you're holding someone's silver as a custodian, you're not hedging squat. They're risking the whole thing is a risk. They're hoping it goes higher. I hedge my position because I buy inventory to sell to people. I can't let it crash or I go out of business. But when you're a custodian and people are signing up to buy the metal that you hold for them, you're not hedging it. What you're doing is selling it into the market to create excess supply to manage the price. Well, he just came out and echoed a lot of the things that we've all been talking about for a long time. Did you see that article by chance?
I did, and I'm looking for it in the background here.
Well, he says the key difference between the current commodities rally and those of the past has to do with the changing nature of the petrodollars. Where have we heard that before? With major commodity producers no longer automatically recycling their dollar-denominated oil revenues back into U.S. treasuries. Where have we heard that before? He says it explains a lot why gold prices, and I would add silver, are as strong as they are. And what is the evidence of that is the emerging markets, the BRIC countries, all met with Saudi Arabia and other key participants in November of last year and discuss how they're going to trade with one another using local currencies. And then whatever it nets out in settling, they would settle in gold. Where have we heard that before? And he notes that both China and India are paying for oil in local currencies and others. And he thinks that Russian sanctions on Forex reserves mean we're unlikely to see a U.S. commodity deficit recycling playing out probably ever again. Where have we heard that before? We've been talking about this shit for 2 years on your site. And now Jeffrey Currie, who's, say what you want about him, working at the Carlyle Group and former head of commodity research at Goldman Sachs, he's at the head of the table. He knows everyone. And I think the takeaway was the last paragraph of the article where he says Currie's confirmation of gold recycling. And again, and I would say it's not just gold, right? Gold is replacing the treasury bond for sure, but I would add silver, I would add oil, I would add base metals, I would add, all of these commodities that are integral. But gold is the key one. And a lot of us have a bad habit of saying gold and meaning everything, gold, silver, platinum. But anyways, he says Currie's confirmation of gold recycling of commodity surpluses means the de facto net settlement is gold. Let's not forget that the oil markets alone are roughly 12 to 15 times the size of the global gold market. So if indeed all of these countries are selling their goods for local currencies with one another, which they are, and we've seen a lot of evidence of that, and then netting out the excess in gold, in silver, in oil, in rare earths, in copper, in whatever the hell that it is destroying little by little the value of the dollar, both its settlement and reserve status. I hope this makes sense for people. But look, you got the M2 money supply up 14 times since 1980 and still silver at 60% of its high. It doesn't make sense unless it's been managed. And there was an article or a interview that I saw on Palisades Radio, a guy named David Jensen. It was fabulous. It was really, really good. And I want to give the guy credit because he's what he inspired me to do some digging. But what he was talking about was that the LBMA trades 292 million ounces of silver per day and 20 million ounces of gold per day, right? You contrast that to the Shanghai Metals Exchange, where you have to deposit a bar first to trade it. They only trade 300,000 ounces a day, yet LBMA is trading 20 million. And he goes on to say that there was a survey done with the bullion banks in 2011, which said the real number is 10 times that. Because if you sell 20 contracts and buy 10, the LBMA only publishes the net, which is 10. It was actually 30 that you traded. So if we take that to be gospel, that there's 10 times the amount that they're telling us is probably more, that would mean that they're trading 200 million ounces of gold per day. And that would mean that they're trading 2.9 billion ounces of silver per day on the LBMA, which in other words, they're trading over 3.5 times global mine production per day on the LBMA. This is how you suppress the price, by overwhelming the system with paper contracts. And what's the COMEX? 1700% rehypothecated, overwhelm the system. But when you realize that the LBMA silver trading is only 3% of the gold trading in terms of dollar value, it's a tiny market, and you overwhelm it with paper, you can control the market until you get countries like India who accumulate 600 million ounces and China voraciously accumulating it. They understand what you've been saying forever. No one was listening. I did, but most didn't, and now they will. And you will go down, as someone who saw it way early, that silver is the linchpin. And I didn't even really understand it back then. It is the linchpin of this whole system breaking apart, because it'll blow up the bullion banks, which will blow up the system. The bullion banks are the big commercial banks. It'll blow up the whole system. The lack of trust will have been shown to be of epidemic proportions. No one will ever trust us again. They won't trust the West. And I think that's exactly what is happening. This is why the banks are showing up in Shanghai begging for silver. If you can't export gold, you can only export silver. And we see massive deficits in both the COMEX and the LBMA in terms of stockpiles. Where are they going to get it to cover these short positions? And I think that's what you see happening. So I don't know, man. I think it's getting really crazy, Chris. I really do. And Jeffrey kind of illuminated it by, saying, look, these countries have chosen to move away from the treasury and move to commodities. They're the ones who are buying the contracts that the stupid banks are naked shorting by creating these contracts. Well, now they want delivery. What's going to happen? Maybe they went there and begged them not to take delivery. Why did Janet Yellen go to Brazil, or begging them to buy treasuries? Why is Jamie Dimon in China right now? Is he begging? Don't blow up the silver market. Let's work out a deal. I don't know, but I think when you see arbitrage of $4 plus, it tells you that they're not making it easy, and I don't expect them to, and they're not doing this out of benevolence. There is a quid pro quo going on, and the bullion banks have to offer up something. And at some point, there'll be nothing left to offer up in a world where commodities rule and paper currencies don't. Right now, we're transitioning there. The dollar still has a great deal of value globally. But what happens when it doesn't? What happens when, no, we don't want it? Because, the old saying, he who has the gold, I would say, he who has the gold, the silver, the platinum, the palladium, the uranium, the rare earth metals, and the food, and the copper, they make the rules. And I think that's the transition that we see ourselves heading into.
Well, a handful of interesting points that you mentioned in there that I'll pull up. One, you talked about the banks getting short silver, and as you can see down here, the commercials, the swap dealers in this green line, about 40,000 contracts short, which is over the past 3 years, the highest level we've seen. So yeah, the price is going up while they continue to be short. It'll be interesting to see. Well, I guess more so had we not had the rally on Monday, but when things sold off on Thursday and Friday of last week, would have been interesting to see the data shortly after that, although not how the CFTC reports that yet. And one other note, just wanted to, for accuracy purposes, we did have some recent additions into the COMEX registered. So now up over 61.5 million ounces in COMEX. So higher than it's been. We did get below 30 last year a couple of times, but just so people
Well, let
know.
me ask you a question. Does that to you signify that they are throwing that in there and see how fast it went up? Are they throwing it in there because they know that they have delivery notices that they have to deliver to? Is that the way you interpret that or not?
I think that's a possibility. I don't know that I could guarantee that right now. So I think obviously that's why it's something we keep an eye on. But at least as of now, up over 61 and a half. Although, Andy, the last thing I wanted to touch on, and we're running out of time a little bit today, maybe we can dig in more last week, but you talked about what Jeff Currie was saying. And here was an interesting one that was sent to me by someone who's been telling me about this for a couple of months now. I'll check whether, and we may bring him on the show. I'll leave his name private for today, but he had talked about a white paper that was going around for something called a unit currency that he felt was being advanced by people associated with the BRICS. And about 2 weeks ago now, we had this report from Pepe Escobar, who is a journalist that many people are familiar with, somewhat well known. Again, this is his report. So I've not seen other confirmation of this, but just in terms of what he said, welcome to the unit, a concept that's already been discussed and is set up for meetings on the BRICS Business Council, has a serious shot at becoming official as early as 2025. If we take a look a little further down here, obviously they talk about the issues and the problems that we have discussed a bit, but certainly a key part here. New concept in terms of an international currency anchored in gold 40%, BRICS currency 60 plus percent. And down here, he mentions that priority for the unit conceptualizers is to inform the general public about the system. And again, the part that I found also impactful, The unit has already received backing by the BRICS Business Council and is on the agenda at the crucial ministerial meeting in Russia next month, which will work out the roadmap for a summit next October. So again, does this mean this is gospel and definitely happening, but certainly a report suggesting that it's not just being talked about, because we've heard these comments from Sergei Glaziev over the past couple of years, and he has some comments in here as well. And I'll put the link to this in the description field, but here mentioning he's been following the development of the unit anchored by physical gold and BRICS. And we'll see, not a done deal, again, to be clear, but in some ways really echoes what you were saying about Jeff.
I'd like the people to know just how on the cusp you really are. I mean, a lot of the stuff that I talk about, there have been numerous things over the years where I've learned from you. And, I hope people understand the amount of effort that you put into doing. I've always thought you were an amazing interviewer, but you are not only that, you're well read and you understand what's happening. And my sincere gratitude and kudos to you for seeing this stuff. And you've told me things long before they happen. You're tied into people who share things with you, and always very politely and very professionally, never telling me who these people are, and I don't care, but yet often things seem to come true. I wonder if today the BRICS and the BRICS plus deputy finance ministers and central bank governors are meeting today. I wonder if this is the topic of what they're talking about. Wouldn't surprise me at all. And I guess only time will tell, but you're right. October is coming close and we're getting there. And then you have the biggest election in our history, maybe mine for sure, my life. And, at least in my opinion. So I think these are very interesting times, man. It's only going to get crazier as far as I'm concerned. But look, it's inevitable. And when you realize that the money supply M2 is up 14 times since 1980, and yet gold is 60% of its high, it's being managed. And the BRICS, they want the metal, like Vince has said on your show. They don't care about correlations. They don't care about anything. They don't care about a strong dollar. They don't care about positive real return. They want the stuff. This is a new era. These are new rules that we are heading into, and they're changing the rules that they've been forced to play under for centuries. And now they're finding safety in numbers, and they have wealth and coordinated wealth. They have larger swath of population and military might and sophistication. And I find it alarming at how this is being understated by the people who are supposedly sophisticated, poo-pooed by the dollar bulls and the recency bias crowd and the normalcy bias crowd. When you talk about something like the unit that would very quickly engulf the whole Southern Hemisphere, the ramifications on the dollar are extraordinary. And it may not happen all at once until it does. This is the little by little by little by little, then bang, all at once. And that's coming. And if you don't see that, at least the potential of it, and get out of the way of it, you'll end up being a victim as far as I'm concerned. You try and say that stuff, Chris. I try and say that stuff with the highest level of sincerity I can muster up. This isn't about trying to send more money to Miles Franklin for metal sales. I mean, I'm long past that. And I just think that I hope people are waking up. These things that can just be trivially, can just be blown off. The unit. Well, the unit's a real big deal, a really big deal. If indeed we're that close to it being accepted, you're going to have the majority of human population trading outside of dollars and settling outside of treasuries, or using excess instead of treasuries into commodities, and the drive to accumulate this stuff in order to fit into the unit is going to be extraordinary. This is a once in a generation shift. I hope people are paying attention.
Yeah. And again, disclaimer, clear warning, this is not a done deal. Is it? I don't think Pepe Escobar is making this up or reporting something inaccurately, but certainly something that just wanted to alert people to. And I'll put the link to that and the unit white paper in the description field below so you can take a look for yourself. Andy, one last note. As you were sharing your thoughts on the current construction of the silver market, I was thinking there's good news on the way. I know you don't like the way commodities are traded, but last thing I'll mention for today from here, the unit can also help to upend unfair pricing in commodity trading by means of setting up a new, fair, and efficient Eurasian Mercantile Exchange where trading and settlement can be done in new currency. So who knows? Maybe some of the folks at the BRICS were watching your pleas on how the gold and silver markets should trade. And with that said, just before we wrap up, anything on special this week that if people are interested in buying gold and silver, or if they, or perhaps you can even touch on if people, I know there have been people who are selling metals at this point. So anything you could let folks know about either of those?
Yeah, I mean, it shocked me the amount of selling into this rally. It's a contrarian indicator. It just is. I mean, the capitulation when you reach these levels, the belief that, I have a really good friend of mine who was emailing me last night, texting me like, I want to sell the silver that you have. I want to put it all in on this medical device stock or whatever. And I didn't even want to go down the road with them. And okay, people, because he says I think it could go into the 40s and maybe touch 50. He says, okay, well, I mean the lack of belief, I think the lack of understanding is high, and so there's been a lot of selling into the rally, creating an environment where we have, as an example, backdate kangaroos on sale right now for 310 over spot. These are coins that were selling at $6, $7, $8, $9 over most of the last 4 years. We have the half ounce polar bear. And by the way, the kangaroo I love. It's one of the two purest coins in the world at 4.9s, and come in boxes at 250 instead of 500 mini mint boxes. And then we have the half ounce polar bears from Canada. They're also 4.9 fine pure. It's Canada and Australia, the only two 4.9 fine pure coins that are made by a sovereign mint. And these are half ounce coins, $2.50 over per coin melt value. So $5 over spot per ounce. But they come in boxes of 240 coins or 120 ounces per box. And from a standpoint of utility and flexibility, they're the best I've seen next to pre-65 junk silver, because I don't know of another sovereign mint other than the Mexican mint, and they're really expensive, that make fractional silver coins. So they're both on sale right now. Limited quantity of the polar bears, but I did buy a large quantity of the backdate Australian kangaroos at 310 over spot. And Chris, I love you, buddy. Crazy times, man. Going to be a lot to talk about over the next few months for sure. I think, which would really be cool, maybe next week or real soon. I'll let you figure it out with your schedule, since we live so close together. It'd be fun to do maybe a evening live stream on one of our next together in person. You come over here, and we can do an evening live stream and answer questions. Kind of like a mini silver fest, like you used to do, where we're right there answering. I would do it for a couple hours even. I'll throw that out there, and I'd love to do it. If you're up for it, count me in, man. It'd be great to talk to people about all this stuff and get some questions thrown at us.
Well, we can certainly set something up like that, and I think that would be fun to do. And
I'm in. I mean, I'm telling you, over the next few weeks, let's do it.
all righty. And if people did have questions or were interested in any of those specials that Andy is offering, you can email us at arcadia@milesfranklin.com, and we'll be happy to help you get whatever you need, or if you just need more information about anything that's going on. So with that said, it is time once again to wrap up, but hope everyone is doing well out there. Thanks for tuning in. And Andy, we'll see you again next week.
See you, brother.
Well, thank you, Andy, as always, for today's report. Hope you enjoyed that at home, and certainly a handful going on out there. And in either case, I hope you're smiling today as we are enjoying a silver rally with a price right around $32. Real quick before we wrap up, did want to thank Silver Viper Minerals, who has brought us today's show. Obviously, we've had Steve Cope of Silver Viper on several times in the past year and beyond, and They are advancing their La Virginia project, which had an initial maiden resource estimate of 49 million ounces of silver equivalent. They've been wanting to get back out there and drill. Just wanted to give you an update on the financing. Basically, they did about half of the financing over these last two tranches. They're not going to be out drilling just yet, but hopefully going to be able to move forward with that in the coming months ahead. And certainly the Silver Rally is helping with that a little bit. So you can find out more about Silver Viper at silverviperminerals.com. We'll have Steve Cope back on June 10th. So look forward to hearing from him about the latest, and going to wrap up for today, but hope you're doing well out there, and I will see you again tomorrow.